Welcome to the Screencast for petty cash funds. Due to numerous issues in accounting such as fraud, various policies have been implemented to ensure the integrity of all financial reporting. This is underlined by internal control, which is a system of policies and procedures used in a company to promote efficient and effective operations with compliance to the law. One aspect of internal controls includes cash, in which we will be focusing on petty cash funds. As cash is one of the most important assets, company must ensure they safeguard their cash and report it correctly to ensure cash doesn't come and go unrecorded. Most companies require all payments of cash be made with an authorized check to monitor cash outflows. However, when companies only need a small amount of cash, the process of writing checks can be a burden. For example, small mailings, taxi fares, and supplies. Essentially, petty cash fund is the amount of cash kept on hand to pay for minor expenditures. This involves 3 activities. The first step is to establish the fund, then make payments from the fund, and then finally replenishing the fund. The first step is establishing the fund. Firstly, a check is written for the amount of fund under the care of a designated employee. Say, for example, we want to write a check for $100. When journalizing this, we debit petty cash for $100 and credit cash for $100. Because this recording is only establishing the fund, there is no change in total assets. The next step is making payments from the fund. After we establish the fund, we are able to use the cash for minor expenditures. Payments can be either made with cash taken from the fund to make a payment, or when employees seek reimbursement for payments they have made. An important part to remember as part of internal control is that the custodian must collect receipts for the use of any cash. In this step, no journal transactions are needed. The last step is replenishing the fund. When cash in the fund decreases, the fund must be replenished. To do this, the cash remaining is counted and the company cashes a check the amount that brings the total cash in the fund back to its original balance. The receipts collected, as stated in part 2, are now used as documentation for recording expenses. We do this by creating a petty cash fund replenishment report. Firstly, we put down petty cash fund for $100. We then deduct the cash remaining in the fund, which will give us a total of the cash requested to replenish the fund. Next, we have to note the receipts in the fund. This includes office supplies, postage, and miscellaneous, in which we will come to a total of $90. This tells us that we need to replenish $90 as per the receipts collected. Now the company must check $90 to replenish the fund and record the expenses. To do this, we go back to the general journal. Firstly, we must debit all our expenses. This includes supplies at $38, postage at $20, and miscellaneous expense at $32. We then credit the total amount of expenses as cash, which equals to $90. And that is the process of how we record and use petty cash funds. Thanks for watching.